Good morning and welcome to Business Morning on Channels Television. I'm Chimeze Obi Iwago. Thank you for joining us. Well, let's begin the show from the global oil market as prices fell this morning, pairing gains from the previous session as persistent demand concerns due to the coronavirus pandemic outweighed hopes for a new U.S. stimulus package. More than 1 million people have died of COVID-19 as of Tuesday, with fatalities and infections surging in several countries. U.S. West Texas intermediate crude futures dropped 22 cents to $40.38. The more active Brent crude futures for December fell 19 cents to $42.68 a barrel. The November contract, which expires on Wednesday, fell 17 cents to $42.26 per barrel. Commodities markets crept up earlier in the day as Democratic lawmakers unveiled a new $2.2 trillion coronavirus relief bill, which U.S. House of Representatives Speaker Nancy Pelosi says was a compromise measure. Brent and WTI in August hit their highest levels since early March on optimism over rising fuel demand and major oil producers' strong compliance with promised supply cuts. Since then, though, they have dropped about $3 on demand worries. And back here, agriculture as an indigenous occupation in Nigeria has gone through various phases of development. This development is an effect of government policies and state approach to agriculture, which either demeans or heightens the impact of the sector in the nation. The sector in the 1960s contributed 85% of the Nigeria foreign exchange earnings, 90% of employment generation, and about 80% to gross domestic product. Available data also confirms that at independence in 1960, the contribution of agriculture to the GDP was about 60%, which is typical for developing agrarian nations until the oil boom. Although Nigeria today depends heavily on oil industry for its revenue, it is still predominantly an agricultural society. However, the latest GDP data shows the sector contributed just 24.55% to aggregate real GDP in the second quarter of this year. And as Nigeria marks its 60 years of independence, many believe it's time to go back to the drawing board to bring back this sector to its past glory. I'm being joined by the Chairman and Chief Executive Officer, Best Foods Global Limited, Mr. Emmanuel Ijewere. Thank you very much, Mr. Ijewere, for joining us on the show.
Thanks for having me.
Good morning. Now, agriculture used to be the mainstay of the Nigerian economy from independence till the 70s. Where did we miss it?
We missed it because we misunderstood the gift of God to us. The gift of God that we suddenly discovered was oil. But it was not meant to destroy us. It was meant to build us and become one of the top countries in the world. That is where we missed it. Our own mindset. If you look at it historically, like you rightly pointed out, in 1960, agriculture accounted for 60% of our GDP. Then oil came in 1959, and we now had a coup. After the coup in 1966, it now became a situation where all the plans that the three regional governments have put in place were thrown into the dustbin. And the new people who are now in charge of Nigeria's economy, the military, had a different mindset. And they would have not confronted with so much money in their hands that the structure of Nigeria's future was no longer as important. It's about money today. And agriculture now was kept in the background while so much was being spent from the foreign exchange importing goods into Nigeria. This created a situation where many of our young people who would have taken over from their fathers and their grandfathers left the various villages where agriculture was practiced and went to the cities. This situation continues to deteriorate until we got to after this, we had a civil war, which was disastrous. After the civil war, we now had a situation where the military tried to do what they could, the civilian government tried to do what they could, but the mindset was still wrong. There was no long-term plan, there was no long-term structure, there was no deliberate belief that agriculture was Nigeria's economic future. Until we got about some few years ago when we had a gentleman called Dr. Akim Adesina, He came, his first job was to change Nigeria's mindset. First and foremost, he said, agriculture is a business. See, if we had come up with that kind of idea in the 60s, Nigeria today would be one of the first world countries, because we started off as a fantastic country economically and in agriculture. That's where we got it wrong. The mindset was wrong, and the corruption itself had its own great toll. And still having it till today. That's where we got it wrong.
Now, you are an accountant turned to farmer. Why is agriculture still at a rudimentary level dominated by peasant farmers 60 years after independence?
All right, I will answer for it from the time I came into agriculture in the year 2000. So I would say that I can account for the past 20 years. Not 60 years, but I was a young boy 60 years ago. Now, so for my own period, what I have seen is what I just narrated to you, that in the past 20 years, what's happened is that you've had all kinds of interventions, but the interventions meant well, but corruption took over because the people they were intervening to assist, that is the farmers, were old people, uneducated people, hardworking people, and therefore the civil servants took advantage of all those monies. Nobody saw anything that came out of it. A lot of interventions, but those are some of the things that were responsible. I think as far back as 10 years ago or 12 years ago, government recognized the fact that agriculture was Nigeria's future. The oil volatility is a great disadvantage to us, and I hear now when you said earlier that the oil price today is $42 per barrel. I think that makes me very sad, because I would have preferred oil to be just $4 per barrel. Then we can come back to our senses.
Yeah, of course, you did mention that various governments, of course, have been talking about diversifying this time around, perhaps having realized the fact that we can't just depend on oil. How would you describe the responses of respective administrations since independence towards the growth of this sector, and how successful have they been? I mean, government have introduced several intervention funds to support the sector in the past. We have agri funds and so on, and we even talking about anchor borrowers, by the present administration. What has been the experience of agriculturalists like you with these funds?
The past 6 or 7 years has been one of great hope. Like I said, from the time of Dr. Adesina, a number of people, educated people, were beginning to now reconsider going to agriculture as a profession. It's taking a long time, but it's happening, and there's a lot of undercurrent going on. Unfortunately, one of the sectors of the economy that will have helped drive this, which is the banking industry, failed the agricultural industry. They kept on telling everybody that agriculture was a very risky business. Oil was the best place to go. Well, in actual fact, a particular bank, one of the top first generation banks, for 15 years kept in its report every year that agriculture was the best performing sector in their own bank annual reports. So nobody spoke for agriculture. Because they were all checkered. But what has happened lately is that this central bank stepped in through the commercial agricultural scheme and the anchor borrower scheme. They seem to have now created a new revolution coming on now. All we need to do is to say to the central bank, discuss a lot more with the private sector. A number of well-educated people are coming in, an older generation who sustain this country at the expense of themselves because they remain poor, but they worked so hard to feed us. Nigeria has not suffered food shortage in terms of creating starvation and so on because of these people. And I think they are the greatest heroes we have in Nigeria. These various farmers in the various villages who wake up very early in the morning. They should not be forgotten. In these 60 years, they have sustained us as a country. They have given their lives up. They have remained in abject poverty and have continued day in, day out to go to their farms and send food out. And when it gets to the people in the city, the next thing they price it. And they say, it's too expensive. But they don't know how much sweat has gone into it. So I believe that those people should be honored in these 60 years. Having said that, I want to come back and say that things are now beginning to change. The central bank intervention showed a lot of in-depth thinking. Before now, or before 10 years ago, a number of decisions were taken by government from the basis of supply. But with the new thinking in agriculture, it must be demand-based. The supply-based economy will not help. Produce things that you are not sure whether that's what people want to buy. It does not make sense. So let those who want the goods determine what kind of goods they want and what quantity they want. Those are the things that are changing now, and these are helping the mindset. And more industries will come once they are able to get into this. Then you now have challenges in terms of the post-harvest losses. Nigeria is one of the countries in the world with the highest level of post-harvest losses. Those is very bad and shameful. And as of today, Nigeria in Africa is one of the least refrigerated countries in Africa, not to mention the world. I'll just give an example. India, for example, has a total of about 30 million cubic meters of refrigerated space. Nigeria, as of today, has not. I don't think we've exceeded 120,000 cubic meters. South Africa is 3 times the size of Nigeria in terms of refrigeration. So refrigeration is one area because that's part of the value chain. Like Dr. Additional said, agriculture is not just farming alone. Agriculture is the entire value chain. And you need to get it right at every stage. Not enough to produce. You must be able to offtake. You must be able to preserve them. You must be able to harvest them in a manner that will not destroy them. Those are the things that are challenges that we are facing now. And I think, but I'm beginning to see that the banks are now beginning to take a cue, and they are setting up very serious agricultural desks in their various banks now. And thank God, like I said, I'm so sad when you said to me just now that the petrol price, the world price has gone to $42. I'm very sad. I'm sorry to say that. I'm very sad. I wish I continue to go down to $4.
All right. Well, some people wouldn't think so, Mr. Ijewere. Anyway, you talked about value chain. Right. Talk to us about the linkages between industry and agriculture within the context of backward integration. Have we achieved much?
We have not achieved much. No, certainly not. But we are beginning to get to that stage now. What has happened is that because of lack of serious interest in agriculture, a number of industries that were set up long ago during the colonial times to use up our own raw materials are no longer being serviced, are not getting enough of such raw materials for their various factories, and their businesses are growing. So many of them have now resorted to importing those goods, like palm oil from abroad. We're importing all those things from abroad. We're importing maize on all of these. But something has happened recently, and a number of things happened. Late last year, the federal government closed its borders, and everybody thought Nigeria would collapse in terms of food. Nigeria did not collapse. Then COVID came. Everybody thought that was the end. That Nigeria did not collapse. Before COVID came, the central bank had removed a number of items from the list of those that can have access to foreign exchange. They felt a number of people protested, Nigeria did not collapse. Now, it's beginning to dawn on us that we are capable of improving what we have, if only our minds are collectively directed towards it. It's beginning to happen. And I just hope that the borders will remain closed for now to enable us get to our potentials. What's also very exciting is that Nigeria will now be signing into the African Free Trade Zone agreement. Once that is done, Nigerian borders will be open. So we need to prepare ourselves. Nigerians have always been champions. Everywhere we go, every industry we are involved in, we we always find ourselves to be champions in Africa. Agriculture should not be different. So a number of Nigerians, unfortunately, have heard in recent times, since these African free trade zones came up, have gone to places like Gabon and a number of other countries where there is ease of doing business. Government must try to create an ease of doing business. You want to have land for you to plant your crops. What you have to go through with government. You had the story of the Songhai. Songhai, the Reverend Father who wanted it, who started it, wanted to do it in Nigeria, could not find land. So he went across the border. Now we're all going there now to trade. So government must now get its mind, especially the state governments, must now start competing for people to come to their places to develop the agriculture. Please, the sustainable source of Nigeria's growth is not oil. In fact, the world itself is beginning now to say, look, let's move out of fossil fuel. Many of them are going into alternatives. So what I'm actually pleading for is that we recondition our minds. The future is great. God has been kind to Nigeria. The land is good. The people are hardworking. Do it in the right direction, and I assure you, Nigeria will not have any problem.
Now, I remember in those days, well, I wasn't there, but history told us that in those days when, we had the regional governments, every region generated its own income through their cash crops, like we have in Southwest, where we have cocoa. Can we ever have a situation like that where state governments could, generate their revenue through their major cash crops without depending on revenue allocation? I mean, going forward, Nigeria is celebrating 60 years. What happens, after now?
I'm sorry for being so dramatic. I would suggest that all the governors, all the 36 governors, should all be taken to a hall where a psychiatrist will talk to them about where Nigeria should be going. And every effort should be done towards that direction, because that's what will provide jobs for their people, or for our people. That's where jobs, that's where the industries can thrive. So until we're able to do that, I don't think we can really, because agriculture is not done in Tinubu Square or in Oba Square in Benin. It's done in the various villages. And what is the work of the local governments? How geared in are they? Local governments are under the state governors. How are they being used? So we must really be granular. We must really dig deep to get this thing done. We have a chance. We have a great opportunity now. But our local government chairmen and their councillors, the governors and their cabinets, the Federal Executive Council, the president and all others must believe in it. They must move away from the fact that now when they devote money to agriculture, they make a lot of noise on pages of newspaper and on television, and the money ends up in individual pockets. That's now changing, because the people who are now in the agricultural space are getting better educated, getting better informed. So they need to rechange their own minds. And the other one I quickly want to bring up is the research institutions. A research institution that only researches for itself, or researches to give to the minister, or researches to give to the commissioner or governor. Governor is not a farmer. The minister is not a farmer. If you research and your research does not add something to the improvement of the lives of the people, it's a wasted money. So we need to also bring the research institutions together under one umbrella. Let them work together to grow agriculture.
All right.
Brazil did it, and it's so fantastic. Those are issues that we need to really look at. All
right, Mr. Ijewere, let's just hope we get it right going forward. Thank you very much for your time on the show. Mr. Emmanuel Ijewere is the Chairman and Chief Executive Officer of Best Foods Global Limited. Thank you for your time. And after the break, we'll look at the commodities market space. Do stay with us. And on commodities market, I'm being joined by Desola Sumoni, one of the research analysts with Financial Derivatives Company, joining us from Reading. Good morning, Desola. Thank you for joining us on the program.
Good morning, Chimeze. Thank you for having me on the program.
All right, now looking at what you have there as the burning economic issues, we have the federal government, of course, and Nigerian labor unions reaching an agreement to suspend the increase in electricity tariffs for 2 weeks. What's your view on this development?
I would say this is positive. At this time, the last thing Nigeria needs is a disruption to economic activity, given the fact that Nigeria is still reeling from the effect of the coronavirus pandemic, as well as the fact that Nigeria is technically in a recession. So what this simply means is that, you know, at least for the next 2 weeks, tariffs will go back to what they've been before, which is the multi-year tariff order, and then the trade unions will be looking to recalibrate some of the tariff increases in some residential areas.
Now, cost-reflective tariff is one of the preconditions to access the World Bank loan. How do you see this impacting this?
I think that the effect will be minimal. In fact, no effect on the World Bank. I think the effect will be minimal, right? And I think that, you know, this cost-reflective tariff is here to stay. Although initially it might, you know, increase the cost of living, but looking at the more medium term and the long run effect, I think is a net positive for the overall economy. So I think that I think the disagreement between the labor unions and the federal government will be resolved, and I think that, you know, the cost-reflective tariff is here to stay.
Now, one would say whether it's suspended for 2 weeks or not, it wouldn't make any impact on commodities prices. Do you think so?
I think, okay, if we imagine that the tariffs are implemented, right, and the electricity tariffs are increased. Well, in the short run, we expect it will increase commodity prices, because first it will increase the cost of living, and it will also reduce the disposable income of the average Nigerian, which will then increase their demand for commodities. So in the short run, we expect, you know, higher demand for commodities, higher cost of living. But in the longer run, the fact that, you know, electricity supply is expected to be more stable, I think it will incentivize investment in the sector to create jobs, and at the end of the day, it will increase aggregate supply, which will now bring commodities, which is positive overall, I think, for the economy.
Now let's look at the developments on the global oil market. Brent crude started the week on a bullish note, advancing about 1.31% on weaker US dollar. What are the other factors driving oil prices at this time, and where do you see oil prices in the near term?
Okay, like you said, the US dollar weakened, I think, by 0.08% week to date against the basket of other currencies, which simply, you know, made the oil, US dollar dominated oil cheaper for holders of other currencies. But in addition to that, we are seeing other downside factors that are weighing on prices. For instance, Libya has increased their oil exports after a blockade on their exports was lifted. So last week, I think Libya exported just a little below 100,000 barrels per day, and by this week, they're already exporting over 250,000 barrels per day. But on the other hand, on the demand side, we are seeing the fact that rising coronavirus cases in key economies in Europe, in the UK, France, Spain. We are seeing more restrictions, which is hurting oil demand recovery, and that is further weighing on prices. Furthermore, we're expecting, you know, rise in US crude stockpiles, which overall is signifying that the market is still oversupplied, and all these factors are weighing on oil prices. And going forward, we expect these factors to persist at least for the next 3 months. The expectation is that oil prices will trade between the early 40s and late 30s.
Back here in Nigeria, part of the issues Labour is fighting against is the hike in petrol prices, and we know that as long as oil price goes up on the international market, we pay more for petrol, particularly with the removal of a fuel subsidy. But does it worry you that our refineries are not working optimally, and that's a major challenge?
Oh, yes, it does. And thankfully, I think yesterday or today, the president has introduced the petroleum industry bill to the National Assembly, which, you know, part of the conditions or the requirements of the bill is to scrap the privatize the NNPC and scrap the petroleum PPP area, I think overall this would I think this would lead to proper investment in the oil sector. And I think if the bill is implemented, I think it will be positive, and I think our refineries will begin to work. Fingers crossed.
Nigeria is said to be backers in the OPEC production cuts. However, OPEC is set to strictly enforce production cuts and slackers. What does this imply for Nigeria's trade balance, reserves, and exchange rate?
First, Nigeria, Iraq, Nigeria, and I think UAE are one of the biggest slackers of the production cuts. And Saudi Arabia has been taking most of the hits from the production cut, cutting more than they expected. So for I think for August, Nigeria's oil production was about 1.4 million barrels per day, and our quota is about 1.4. Our production was 1.49 million barrels, and our quota is about 1.4 million barrels. So we are producing about 90,000 barrels above our quota. And I think Nigeria is moving towards complying with the quota. So if we do that, we reduce our production to 1.4 million barrels per day, with oil prices stuck at around $40 per day. I think overall we know the effect would be lower oil receipts, which again would mean lower accretion to our external reserves, and would still mount pressure on the exchange rates.
Okay, let's look at the domestic commodities market, talking about Agri Commodities now. One of the key developments there is that cocoa prices are up in Ondo State here in Nigeria. What would this mean for Nigeria's revenue, given that cocoa is Nigeria's major agri-export?
On one hand, you can easily say that, it's positive for Nigeria because, prices are up, then revenues will be higher and things like that. But if you look at the contribution of cocoa to Nigeria's total exports, you see that it's very small. It is around 2 or 3%. So even though the prices are up, which is positive, Nigeria gets more revenue, but the impact on the total government revenue, on the total export receipts, I think is very small and is almost negligible.
And wheat prices also trending higher on the global market. What's the implication for Nigeria?
Nigeria, as we know, we are very heavy wheat importers. Even though the flour milling companies are trying to, introduce, have a mix of both local wheat and imported wheat. But the fact that the prices are increasing due to, what Wall Street Journal call, I think, wicked weather events, which is affecting harvest globally. I think the effect is if this increase in prices persist, I think it will increase Nigeria's import bill, and this may translate into the cost of production for these flour milling companies. So commodities that are heavy on flour and wheat, such as pasta, your noodles, bread. I think if this price increase persists, it may translate into higher prices in the domestic market.
All right, thank you very much for your time, Desola Sumoni. Thank you.
Thank you for having me.
Desola Sumoni is one of the research analysts with Financial Derivatives Company. Let's revisit the global oil market again as prices fell this morning, paring gains from the previous session as persistent demand concerns due to the coronavirus pandemic outweighed hopes for a new U.S. stimulus package. More than 1 million people have died of COVID-19 as of today, with fatalities and infections surging in several countries. U.S. West Texas Intermediate crude futures dropped 22 cents to $40.38. The more active Brent crude futures for December fell 19 cents to $42.68 a barrel. The November contract, which expires on Wednesday, fell 17 cents to $42.26 per barrel. Commodities markets crept up earlier in the day as Democratic lawmakers unveiled a new $2.2 trillion coronavirus relief bill, which U.S. House of Representatives Speaker Nancy Pelosi says was a compromise measure. Brent and WTI in August hit their highest level since early March, and on optimism over rising fuel demand and major oil producers' strong compliance with promised supplies cuts. Since then, though, they have dropped about $3 on demand worries. Investors will be looking for signs of U.S. demand growth in data from the American Petroleum Institute later today and the Energy Information Administration on Wednesday. In the meantime, back here, the President, Muhammadu Buhari, will today inaugurate Nigeria's first standard gauge train, the Itape-Ajokuta-Warri rail line. According to the Managing Director of the Nigerian Railway Corporation, Fidet Okera, the President would not be physically present at the event but would conduct the inauguration virtually. The Minister of Transportation, Mr. Rotimi Amechi, is expected to lead other members of the Federal Executive Council as well as other government functionaries to the event. All right, virtual career fairs are fast becoming the alternative solution channel for job search following the lockdown measures stemming from the effects of the COVID-19 pandemic, which has rattled the workforce environment. This mode of employment exhibition and job offerings bring to bear the significance of such developments in the era of the pandemic and exactly where job is at the moment. To discuss this is the head of corporate services at Jobberman Nigeria, Joshua Enapwaniko. Thank you very much for joining us, Joshua. Good morning.
Good morning. Thank you so much for having me.
So, having seen unemployment report for the second quarter of the year put at 28%, where lies the next job opportunity in this pandemic?
I mean, these jobs, the jobs that are available right now are most likely remote jobs. And we've seen a lot of employers accepting work. And really and truly, this pandemic has shown that one can be effective as effective as working from home as it can be from working. So really and truly, it's a matter of everyone coming online and being effective from the most common.
Now, how effective do you expect virtual career fairs to be now that it's on the rise?
So, I mean, we've decided to embark on an ambitious project of creating a virtual career fair where we have 10,000 participants and about 250 employers that will come to hire. And we believe that this opportunity here has been made available just because of this pandemic. And we believe it will become a norm reason because the capacities in which we can take online are a lot more than physical locations, right? A lot of things can be done simultaneously, a lot of master classes can be done simultaneously. And because of that, we believe that it allows for flexibility for us to conduct events, especially now that the world has gone completely virtual.
Now, given the impact of the pandemic, what's your outlook on the third quarter unemployment data and how much of solution can you proffer?
Well, I mean, unemployment has always been an issue here in Nigeria. And what we can do is take steps to resolve that issue. For us, what we're doing here is, first of all, having participants soft skill trained, right? And we believe that adding soft skills to hard skill trained qualifications would help, the employment numbers because as well as employers are not just looking for soft skill and hard skill trained individuals, but people that have emotional intelligence, people that have effective time management. And what we believe there is once you're trained, you will have what is required for an employer. What employers move forward.
So what are the chances that these virtual fairs can impact the country's unemployment rate status?
I mean, so the employers that come for virtual career fairs have committed to hiring. So everyone that attends these virtual career fairs, and that's from our own virtual career fair, right? We have employers that have jobs, right, available to be engaged by qualified job seekers. So we believe that we are definitely helping plug that gap.
Now, nepotism is a big issue in Nigeria, and it can be said that this is one of the many reasons youths are not getting jobs in Nigeria. How can employers and government create equal opportunities for all?
I mean, it's quite simple. Transparency is key, and transparency comes here from our angle through competencies, right? So again, we push the initiative that once individuals are soft skill trained, once individuals are hard skill trained, and they come onto our platform, right, they have the opportunity to apply for any job within the website, within our platform. And then any of these employers that find them competent can engage them. So really and truly creating a transparent environment is really the key. And most of that environment can be created in an online space. And that's what we're doing here.
Now, with unemployment and underemployment reaching an all-time high in Nigeria at over 40% due to the pandemic, the search for job has become an overcrowded marketplace with 18 to 35-year-old mostly affected. How can young job seekers stand out?
I mean, it's for that, again, I can't emphasize enough on being soft skill trained and hard skill trained, but also at the same time, they also need to be ready at every opportunity they get to showcase themselves. So they need to understand what employers are looking for. They need to prepare themselves for the current jobs environment situation where we have right now. So, I mean, for me, what job seekers need to do is just adapt to the current situation that we have here. And the current situation is going virtual. The current situation is understanding how to be most effective from work from remote locations. The current situation here is being trained and being competent enough to execute tasks provided by these employers.
All right, thank you very much for your time. Joshua Nico is the head of corporate services at Jobberman. All right, let's look at the markets, and we have Temple Ashaju there. Good morning, Temple.
Good morning, Chimezie. I was going to say BC, but no, it's Chimezie, actually. We're going to jump again yesterday, 72 basis points in the market. And, of course, this has translated to some positive for the equity cap. Look at the number. It's getting closer to 14 trillion market cap, taking us back to the pre-COVID era, thanks to what we're saying on the other side of the market, the debt side of things, because equity is now the toast of the market. Volume of transaction, let's say thank you to Zenith Bank and, of course, MTN, which is up by more than 2% yesterday, and of course GT Bank. These three key companies accounted for 65% of the turnover that we had in the markets yesterday. Look at it. In spite of the fact that it came in red, it was actually 4.02 billion naira yesterday. Zenith Bank, 90 million units of its shares traded for a whopping 1.55 billion naira in the markets yesterday. So impressive for a lot of the stakeholders or shareholders in that side, on that side of the market. All the sectors are still in green. We've got the banking stocks. Thank you to FBN Holdings, which is up by more than 3%. And of course, Sterling Bank more than 2.5%. And your Access Bank also got a bigger share of the gains that we saw here. Consumer goods side of the market, I think Nigerian breweries was resting yesterday, but we got our international breweries, which was positive yesterday. Champion Breweries was up by more than 9%. And of course, Flour Mill, 70 basis points gain. Put all of that together, accounted for this pie that we have here, 0.53%. Industrial goods side of the market, Bois Cement, which is going to be paying out some dividends, was up yesterday. And of course, WAPCO was also positive and helped this segment of the market. Insurance, WAPCO got some, ICO got some gains as well. ICO was up by around some 8-9% in the markets yesterday and was able to push up the segment of the market. That's the insurance space, which was up 1.82%. Let's look at the oil and gas sector. Got some stories for you right here under the energy stocks because of what we saw on that space. O&Do is back up 2 naira 23 kobo. We got to 9.85%. It was on bid yesterday, just as we saw Total, which was also on bid. It was actually 10% and was the key gainer in the markets yesterday. Led some more than 20 other stocks in the markets to actually record 88 naira. Recall that Total is a major company. It actually trades higher than 200 naira in the market. Because of COVID, we had actually seen the prices hit the floors, 88 naira. Just imagine that for Total, a major giant in the market. Right here, where we have green Seplat, which is down by 50 basis points yesterday. It's as a result of some profits taken. Know that in the last few sessions, we had actually seen some traction on the share price of Seplat. I think it went higher than 400 naira. But yesterday, 50 basis points decline actually brought it lower. That tells you that there's room for re-entry in that space. Chimezie.
What, Temple, the way you call that billion, one would think you have billions.
We just have to be billionaires someday.
Billion. All right, hold it there. We'll take a break, and when we come back, we'll get back to you. But first, we'll do an opening call to London after the break. All right, let's get a quick update from the street of London with Juliana Olainka. Good morning, Juliana. Well, the Institute for Fiscal Studies has warned that a prolonged battle against COVID-19 would swallow up a large chunk of government's planned increase in public spending and forced the Chancellor into an enviable choice between rather unenviable choice, actually, between fresh austerity, higher taxes, or more borrowing. This is certainly not a good time for Rishi Sunak.
Well, it's not a great time for Rishi Sunak. Well, some would say it's not a great time for him. Others would say that's the job, that's his duties. But I've got to tell you, it's not just Rishi Sunak. It's the millions of individuals living in fear. And there is a big worry about where the government are going to be clawing back some of this money that they've been spending in COVID-19. It's into its hundreds of billions. And of course, last week, the Chancellor decided to scrap the autumn budget in replace of this winter economics plan, which cost him over £5 billion. But the Chancellor did say that he will be conducting a spending review before the end of the year. And that spending review is a time where the Treasury start putting money into different government departments. Now, the Institute of Fiscal Studies is saying that's a bad idea, that the Chancellor should scrap that because there's no way the government can afford to spend in other departments. So far, they've spent about £70 billion. The Institute for Fiscal Studies, it's a very leading think tank here in Britain. They also suggested that to pay for all of this debt that's been occurred over the past 7 months, in every £1, each and every individual in Britain will have to pay an extra 5 or 6 pence in income tax. And that's the only way that they'll be able to generate and claw back some of these funds. They do go into other areas, and I perhaps think we should discuss that later the week.
Sure. Now, meanwhile, London Mayor Sadiq Khan has warned that the capital faces a bleak future of crumbling infrastructure and a return to the bad old days of unreliable tube and bus services unless the government steps in with almost £5 billion of funding. Do you think that buttresses the warning by the Institute for Fiscal Studies that COVID course could wipe out Sunak's spending plans?
Well, yes and no. However, the spending budget for London actually comes from London. It doesn't come from the government. And this isn't the first time that Sadiq Khan has been going to the government asking for money. He's been having a long-running dispute, actually. Of course, Sadiq Khan is a Labour MP. The Conservative government obviously are Conservative. So they don't exactly agree on all the spending measures. But they did receive £1.57 billion in June to cover the costs for TfL, which costs them so much money. And of course, their profits plummeted during COVID-19 because people were just not using the tube. People have come back, but of course that's now been marred because Boris Johnson has reversed his message of asking people to go to work. And so Sadiq Khan is asking for about £2.2 billion from the government immediately, so that he can cover the costs to fund TfL for the rest of the year. And he did say without that, then we will be going back to draconian times where services were disrupted. It was cold, it was dark, it was gloomy down on the underground. I'm not certain if that is the priority for Boris Johnson's government, because there was a lot of controversy in the first time round with Sadiq Khan asking for money that they believe London should be able to fund for themselves.
Corporate world, the billionaire owners of the British petrol forecourts operator EG Group have taken pole position in the race for control of Asda after being named the preferred bidder by the supermarket's US owner. How much do we know about this deal?
Well, it's still early doors, but EG Group, yes, they're owned by the British billionaire brothers. They've put in a bid, I believe, for £3 billion to acquire Asda. Asda is owned by Walmart, the supermarket giant in America. Now, they bought Asda in 2009, and they actually tried to sell it off earlier this year when they tried to merge Asda and Sainsbury's. Now, the financial regulators got involved, and they thwarted that deal, saying that it would hinder any other competition. And so now a bid has been placed by the EG Group. They own petrol forecourts, so they're worth a lot of money. Asda appear to be interested, well, Walmart appear to be interested in this offer, and they have allowed some testing of Asda's in petrol forecourts to see whether or not it will be a viable deal. But that's what we've got this far. But Walmart have been trying to get rid of Asda for some time, so perhaps this is the attractive deal that will get them out of the UK.
All right, thank you, Juliana. Enjoy the day. Okay, back to you, Temple.
Yes, Chimeze, quickly, unlisted security side of the market was marginally up yesterday, 0.07%. We still got the market cap at 538 billion naira in spite of the profit taking that we're seeing across counters there. WAMCO yesterday accounted for more than 30,000 units of the entire volume, which is put at 37,284 here. And of course, you had UBN Properties also contributing some transactions to what we have in the volume, as well as the value of transactions, which settled at 4.18 billion naira yesterday in the market. All of that took place in 7 deals. Quickly, let's look at the bond side of the market, where we saw a bit of more activities yesterday. But for the 23rd of February 2028 paper, it was the worst performer yesterday. 3.21 billion naira was actually sold down on it yesterday, and that actually reduced the sentiment there. But if you look at the other side of the markets, of this particular bond, secondary side of the bond market, it was a bit of decline in yields, because again we saw load shedding here on the 2028 paper, which is at the mid end of the curve for the shorter end and the longer end of the curve. Look at the NT bill side of the market, where it was a bit of a cold shoulder from investors or from dealers yesterday. It was a reduction of 2 basis points actually to 1.8 something percent eventually in terms of the performance. Sorry, I meant an expansion actually. We got an expansion in the yield because again not so much of interest took place there yesterday. We saw also some 42.11 billion naira worth of transactions there, again, a lot of which was on the sell side of things. Almost side of the market, investors checked out some of these papers yesterday. Look at the 2024 paper, 2021 paper, which is at the shorter end of the curve. It was where we saw some reduction in yields by some 717 basis points yesterday. Tells you folks were looking at the shorter end and at the longer end rather of the OMO curve for some interest yesterday. But quickly, we have Ajibola Phillips, who is an FX trader with FBN Merchant Bank, joining us on phone now. Ajibola, thanks for your attention. But we know that recently we saw the very first weekly decline in the external reserve by I think some $69.1 million actually, and that was like the first decline in the last 5 weeks. Can you talk to us about what is actually fueling this decline?
Hi, morning. Thanks for having me. With respect to a combination of a couple of factors. First and first, CBN resumption in the BDC segment, selling to for receivables as well. We have about over 5,000 BDCs, and then CBN is beginning to sell 20,000 to each BDC per week, and that's going to be telling. Also, there's been some bit of resumption in the R&E market, especially focused specifically for the FPIs. That's a bit of demand as well, coupled with the usual demand that we have in the market, or the usual sales conducted by CBN twice weekly by the retail SMIs, and then a slight decline in oil prices. All of it just comes together and would have caused that slight drop in the reserve at the time.
How much of investments or dividend repatriation constitutes part of this drawdown from the external reserves? Do we know?
So the total demand on the market is, you have conflicting figures. Some say in excess of $2 billion or thereabouts. But CBN has consistently started to sell in about 3 or 4 weeks now on almost a daily basis. I think it moved to selling 3 times in a week just to try and exit some of this demand by offering both spot and forward contracts to these FBIs to take out some of their underlying obligations.
Right, Ajibola Phillips, thanks a great deal for your analysis. He is the head of FX trading at FBN Merchant Bank. Thank you so much for joining us on the show. All eyes from tomorrow will be on the NTB auction, around 113 billion naira that the central bank will be offering on behalf of the Debt Management Office. We'll keep our eyes fixed on that to give you more updates at our next session on Business Morning. Chimeze.
Absolutely. We'll keep our eyes on that.
Thank you.
And that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.